Look, I just might put a little bit of context around this before I start. We're an unusual beast because whilst we do have what we consider to be a pretty good lithium project, we're actually here to talk more about a boric acid project with what we're calling a lithium byproduct as opposed to a lithium project. The context around the boric acid project is we think that it satisfies the key criteria that we think is necessary to ultimately bring a mine into production. The first criteria is low capex. The next criteria is high margin. The third criteria is low technical risk. And then additional criteria talk to what percentage of the market that you're likely to be, what type of optionality that the project has, and obviously the permitting status, having run a project with a difficult permitting regime. I'll just get that right. So for some context, American Pacific Borate and Lithium listed on the ASX in July of this year. We raised 15 million Australian dollars as part of that process. We had a post-money valuation of $35 million. We've moved our share price up from 20 cents to where it sits at present at about 40 cents. But we think that there's plenty of momentum that'll be left in terms of driving value out. The project is located in California, not very far away from Rio Tinto's Borate operation, not far away from the Nurma-owned Searles Valley. So interestingly, Nurma's the largest detergents manufacturer globally, so all of their borate production from Searles Valley actually ends up in soap and detergents in India. And then we're not far away from North America's only producing lithium mine, which is the Albemarle Silver Peak operation. One of the things that I guess we've said from the day that we started was that because the project's already had $50 million spent on it, this is for us about execution as opposed to exploration. So what we're looking at is a very compressed timeline that sees us in a position that we can commence construction by the end of next year. And the first thing that we did is we made commitments to the market about getting rigs on site so we could start confirmatory drilling and then get ready to do some production test wells. And what we've got today is 5 rigs on site that's completing that confirmatory drilling. So from a standing start at the end of July and raising the money, we've now got 5 rigs on site, and we've actually got a very exciting release that's going to come out tomorrow, which is the initial acid leaching test results that demonstrate the ability for us to leach out the borates and the lithium out of our colemanite mineralisation. Talked earlier about the fundraise or the IPO in July. The business is well funded. It's still got $12 million in the bank, but it is running a very aggressive compressed timeline. For me, coming back to the reason why I guess I really got involved with the project and liked the project. The first thing is Capex. I think Capex. We've released to the market that our target Capex is 80 to 90 million US dollars for a 90,000 tonne a year boric acid operation. To put some context around that, we've also released to the market our OPEX target of less than $400 a tonne, and we've also released to the market that boric acid is selling around about the $900 to $1,000 a tonne at present. So what you've got is an initial operation doing 90,000 tonnes a year of boric acid for less than 90 million USD, making about $45 million a year in EBITDA, with the ability for serious scale up post that. Talking about margin, so low capex, then high margin, which is obviously going to drive your economic results. The releases to the market do talk about that $345 to $383 a tonne, with a boric acid price that's well over $900 a tonne at present. So you've got a very high margin business protected by a duopoly which sees Rio Tinto and a Turkish government-owned Eti controlling about 80% of the borate market. The next thing we like to talk to is technical risk. This one for me is particularly important. The project today has produced already 1 million pounds of boric acid. The reason why this has low technical risk is because it sits in a colemanite mineralisation, and colemanite mineralisation produces about 40% of the world's borates. So we're not talking about doing something that has never been done before. This is a colmonite borate project. Next thing we talk about is the optionality on the project. So in addition to being a boric acid project, it has a lithium byproduct. Importantly, we produce a boric acid, and sitting in the waste stream after the boric acid production is lithium. We're not sure to the extent of what that lithium looks like. We do have the initial results from the test works. And I have to say we're very pleased with those initial results that will be released tomorrow to the market. But the lithium project is a byproduct project. It's a lithium brines project that doesn't have the associated Capex and OPEX with creating the well fields, nor doing the initial processing. So effectively a free lithium credit. The final thing is we also have potassium sulfate optionality, so SOP. The big problem with Mannheim SOP production, effectively taking MOP and converting it into SOP, is what do you do with your hydrochloric acid byproduct? And we put our hydrochloric acid byproduct into the ground that ultimately turns our colmonite mineralisation into boric acid. So a phenomenal result to give us the SOP as well. And North American SOP markets are very high priced at present, and we sit smack in the middle of the almond belt in terms of being able to sell that product. So longer term, the project is a boric acid driven project with a lithium byproduct and with potassium sulfate credits as well. The next important part for me is permits. Having run a company that had projects in Spain for 5 years, I understand that it's lovely to have permits in place. This project was fully permitted up until 2009. In 2009, the company rescinded 2 subservient permits to the main permits. Today, there is a mining licence in place in California for commercial scale operations. We need to put in place the air and water quality permits, which is a reinstatement process, not a full-blown mining permit process. Then we talk obviously to the tailwinds associated with all 3 of the commodities. So phenomenal tailwinds associated with lithium, as we all understand. Borates have great tailwinds as well. The main use in the US is energy efficiency markets, fiberglass insulation. In addition to that, you've got agriculture. In addition to that, you've got your borosilicate glasses. You've got your mobile phones. You've got wind turbines. You've got solar PV modules. So there's great drivers for borates. Rio Tinto have just recently confirmed growing at 6% per annum in their annual results. So great drivers on borates, great drivers on lithium, and obviously good drivers on potassium sulfate attaching to the food security thematic. For us, critically, this is a very compressed timeline because of the work that's already been spent on the project. This quarter, we expect to release a JORC-compliant resource and a scoping study. The scoping study, we think, puts great financial metrics around the project and demonstrates how compelling it is as a borate project with a free lithium byproduct brines project. The next half of next year is about optimising a flow sheet with some pilot plant test works that we're fully permitted for. From there, we want to be in a position to commence construction by the end of next year. So compressed timeline, compelling financial metrics, hopefully get released in the current quarter, attaching to a scoping study, remembering that a full definitive feasibility study was completed on the project in the 1990s as part of the permitting process. So in summary, I think that it ticks the boxes that you need to tick. Low capex, high margin, low technical risk, great commodity tailwinds. We're not going to be a large part of the market. Phenomenal optionality. And I think that there is permits in place with a proven team that can deliver on the project. Thank you.